Well, hey, going live on a Sunday. Hello, everybody. Going live on a Sunday. Gonna see what we have to do to make a little bit of money next week, a lot of bit of money next week. We're gonna just go to make some money next week. Okay, we want to look at what happened this prior week, what's up and coming, kind of events we've got scheduled, what is scheduled. Want to see that what that's all about, what is scheduled. Okay, good afternoon, Janae. She ready. Yes, Aida. Hi. How we doing? I'm saying hi because I'm not sure if either of you have watched Mr. and Mrs. Smith. And watching Mr. and Mrs. Smith, the person who communicated with them in that series, who gave them all the jobs to do, was called Hi. Hey, Sizzling. And so when I said hi, it made me think about it. Hope everybody's having a really good weekend. It's wrapping up. I know. You know what's interesting? I started thinking about it. I was like, there's no football this evening. This is like, no. Football's done for the minute. We're gonna be chilling off football for a little while, I guess. Hey Karen, hey Marcia. There's no football. What are we supposed to do with no football? But I think basketball, the playoffs were today. My son mentioned that the playoffs was supposed to be today. I'm not as into basketball as I am into football. I am a football fan. Well, I don't know if I'd call myself a football fan so much as I do like watching the teams and stuff. But I'm not like a fan. I mean, if I was looking at like what would be my favorite sport, I don't know if I have a favorite sport to watch on TV because I like watching softball. I would watch that, but that's not as popular. It's not as popular. Hello, Sonia. Hey, Richard. Yes. Thank you, Richard. Appreciate that. Royal Diadem. Hello. Facebook user, you got to tell me your name so I can answer you by name. I trade using Thinkorswim though, since you asked the question. But Facebook user, go ahead and give StreamYard the permission just for me to see your name so that I can answer you perfectly. Okay, I want to be able to answer you good. All right, let's go and look at what was last week all about. What did last week look like? Oh my, I know there was some money. Listen, if you're in the chat and you made some money last week hanging out in our community, then say, one, I made money there. If you're not in my community, but you still made some money last week, put a two in the chat. If you was hanging out with us and you made some credit spread money or you're part of the small account challenge, please put a one in the comments. And if you didn't put a two in there. Royal Diadem says, I made some money with y'all or with your content last week. Yes. Aida, good job. The whole objective is that we do all come up. So by whatever means we want to come up, but I would like to be able to feel like I've offered some success and some good assistance in helping you to get where you were going. I'd like to believe I played a role in that. Not just so I can pat myself, not just so I can pat myself on the back. Old Sonia said, I lost 105 on the CLSK put. Did it drop? You had a put credit spread or did you buy a put? Did you buy a put? Made $13 on the Delta Airlines put credit spread. Okay. Looks like the crypto stocks got out of the gate last week. It tried to get out the gate. Let me get us on the right screen of sharing so that you can see what I see. And we can go from there. Oh, you bought a put. Yeah, Sonia, we don't do a lot of buying in this community, probably for the reason that you end up in it with trouble. I find that when we buy calls and puts, you have to watch a good entry time. It has to be like entered perfectly. And then you got to watch it so you can exit at the right time. You definitely can't assume it's just automatically going to do what you want it to do. So I run into that. You say, I think I got in too early. Yeah, that happens. See that when you're buying, you got to work with that a little different. When you're selling, as long as it stays away from your strike, you're good. A lot less moving parts with selling. Again, I'm not necessarily trying to convince anybody to be a seller. I'm just saying I think it's less moving parts and I feel like it's easier to maneuver the trades. when you're a seller. You won't, there's some trade-offs. You won't, the potential for gains isn't as high as a seller. Because whatever you take in premiums as a seller, that's what you're going to get. So you don't get to say, I put in $100 or $30 and it ran and ran and ran. That's not going to happen if you're selling. Whatever you agree to receive when you're selling, that's what you're going to get. Oh, 940, you put in bright and early. Okay, this is what SPX looked like last week. I'm going to put it on the weekly chart so we can kind of get a look at what did the week look like. Well, what did the candle look like for the week? Last week, we bumped up across that 5,000, didn't we? Or was that the previous week? This is a weekly chart. It means all these candles are 1 week worth of data. And last week, we had this pin bar looking thing. We got some candle people in the chat. If you are a candle person, you can tell us, what does this candle signify? What does this candle? This is a test of the emergency Educator2Trader system. If you've been in a class or two with us, we've talked about some candle patterns, but I want to know what y'all think this candle right here means for the weekly. I hope everybody can hear me clearly. If you cannot hear me correctly or hear me clearly, please say something. I have a little tickle in the back of my throat, but every time I cough, it hurts. So I'm trying to maintain not getting the tickle, like not coughing, but we still gotta go. We gotta go. Potential reversal. It could mean that. It's a long wick down here. It means there was a lot of selling pressure, but the buyers didn't let it be. Yeah, I think it's more so a bullish hammer. More so a bullish hammer, which means it may go on up a little bit higher. You can look at the wick almost like the end of a rocket. It may go up some more. This is what happened last week, right? We closed the week at 5,005. Okay, let's look at the daily chart. These were our days. We had Monday it went on up into a high of 5,048 was Monday. And it pulled back, big gap on Tuesday to pull back. I think Tuesday was the CPI. It was CPI or PPI. I always get it mixed up. I think it was CPI on Tuesday. Pulled back. And then it climbed for the next 2 days. Wednesday and Thursday, it climbed back up right to almost back to, actually went above where it was on Monday. And then Friday, it stayed there and dropped back down. So Thursday and Friday kind of stayed in the zone. Okay. That's what happened on SPX last week. What does that mean for us this coming week? Not sure yet. We can say, okay, well, this is a resistance zone that we've clearly come into, 5,029. That's resistance. And it hit it and came back down. Could it just be coming down to just gain some more strength? Yep. This is support, though. This line I'm touching now is support at 4,499, 4,997. It was 4,000. So 5,000 is support and 5029 is resistance. So it's right in there. It's got to build up some strength in order to get out. Jamie says the most recent candle is buyer rejection. Overall formation is a bearish harami potential reversal. Did you look at the weekly candle too, Jamie? The weekly candle. I think this seems like there could be either one going. This weekly candle gives you the indication that it may want to get a little juice off this, unless that bearish harami you were talking about, you were referring to, I was going to say, unless you're referring to that as a weekly. It closed above the low of the high day. Yep. Closed below the high of the low day. I'm always telling you all, trade what you see, especially if you're doing 0 DTE with our, strategy, the SPX Power Hour. If you're using SPX Power Hour strategy, to generate your 10% per day, Power Hour. I'm trying to type in talk. Power Hour strategy. Can be found at spxplaybook.net. If you're using that strategy, you definitely going to trade what you see. Let me change it a little bit because Facebook them be tripping. It'll show up on YouTube with no problems. Okay, that's what we had last week as far as SPX went. Let's look at our calendar, what's coming up for this coming week. What do we have coming for this week that we're getting ready to start? Tomorrow is a bank holiday. If you got a day off from work, yippee! I know the schools are closed. Mine isn't, by the way. University is not closed, but the grade schools are closed. So my grandson was excited that he didn't have to go to school tomorrow, of course. So Monday is a bank holiday, but I'm pretty sure the market, anybody know if the market's open or closed? We might need to find that out. Is the market closed tomorrow? Anybody know if the market's closed tomorrow? Let's do us a quick search. Let's ask Google. Come on. Is the stock market? I feel like it's probably closed, but I don't know. Market open on President's Day. It says I see some closed. Closed on Monday, February 19th in honor of George Washington's birthday. Okay. Well, there's that. Market closed tomorrow. That's good. It gives me a chance to put together our graphic. I have some numbers, and we're going to look at those numbers, and we will confirm what are good numbers for some of our trades. We'll confirm what is some good numbers together. Anyway, on Tuesday, we're going to have CB leading index. It's a yellow folder. On Wednesday, we have FOMC member Bostic speaking at 8 in the morning before the market opens. And then at 2, we do have FOMC meeting minutes. Now, y'all know what that is. FOMC meeting minutes is when they talk about rate hikes or not, or no. We'll see what happens there, right? That's going to be Wednesday afternoon. Keep that in mind when you're setting your weekly trades. That FOMC is on Wednesday afternoon. Thursday, we've got unemployment claims at 8:30, 9:45, flash manufacturing PMI, flash services PMI, 10 o'clock, orange folder, existing home sales, 10 o'clock, FOMC member Jefferson will speak, yellow folder, 10:30, natural gas, crude oil inventories at 11, and 5, FOMC member Cook will speak. Tentative is Fed monetary policy report on Friday. Other than that, Friday looks like it may be an all clear. Friday might be an all clear. Okay, let's look at our earnings for the week. Look at our earnings. I moved myself to a different part of the screen so that way, come on. Let me see where I am. I don't even see the mouth. Oh, there it is. So we can get a little bit bigger. On Monday afternoon, we've got Transocean, Masonite, Geldwin, Healthstream, and Blackstone Minerals. Not a whole lot. I think we've kind of gotten most of our earnings out of the picture, but we still got a few that are yet holding on, right? This is for next week. Tuesday, we've got Walmart. I don't think I had on our list. I don't. Home Depot is Tuesday morning. Axum, Medtronics, Barclays, LGH or LGIH is LGI Homes, Dana, Armstrong, KBR, and Fluor. That's Tuesday before market. Palo Alto, I think it's a tech space, is Tuesday after close. Solar Edge, Realty Income. Realty Income is a REIT. Realty Income is a REIT. Oh, I'm not sure if anybody knows a lot about REITs, or y'all investigate or look at REITs. I have a few of them. I like that being as a way to invest in real estate without having to go have doors and toilets for yourself. No tenants and toilets when you do REITs, real estate investment trust. You can invest in all kinds of things, put your money there, collect the dividend, and never have to worry about a tenant, right? As you, I don't know if you can tell, but I'm kind of a fan of REITs. I like the concept. Teladoc is here. Innovix, Caesars, Diamondback, Neogenomics, Toll Brothers, and Medifast. On Wednesday before market opens, we've got Vertiv. I'm not sure who this dude is right here. Analog Devices. This is like Wingstop, Wix, Photronics, Global E, Exelon, Alight, and HSBC. Weird that a bank is this far into the season. Usually banks are early in the earnings season. Wednesday, NVIDIA's this far back. Oh, that's kind of shocking that NVIDIA has earnings this late. Why did I think they had earnings a month ago? NVIDIA is Wednesday after close. Rivian, Etsy, Synopsys, Lucid. I hope Lucid can come out the door. There's a $4 stock. Those cars are so cute, but their stock is worth $4. We got Sonova, Dutch Brothers, APA Corporation, Marathon Oil, and Suncor. Thursday before market opens, we got Moderna. They're in the pharmaceutical space. Newmont, Nikola, Cheniere, Fiverr, Wayfair, Pioneer, Eagle Point, FM or First Majestic, and Builders First Source. On Thursday after the market closes, we've got Block or Square. I think this is Square. Carvana is having earnings. Mercado Libre, I think that's a Spanish, like Spanish Sam's or something like that. Spanish Amazon. New Adelex, Booking Holdings, Intuit, Indy Val, which is Oil, Live Nation. And then Friday before market opens, we've got Warner Brothers, Blooming Brands, Lamar, NW Natural, not sure who this is, Docebo, Aircat, Sunstone, Gray, and Frontier Communications. All right. So we've got some in here. Now, just remember, there are times when a stock will have earnings all on its own, like NVIDIA. I'm going to use that as an example. NVIDIA will have earnings on Wednesday, but the things that trade in that same space will also have movement. So AMD will have movement. Taiwan Semiconductors may have movement. SMCI, I think, is one that it seems to be popping up on people's watch list or their eyes recently. And then like SOXL, XLK, those who SPY, Triple Q, everybody who has NVIDIA in their ETF, NVIDIA is a big enough player, and it's probably a large enough portion of the holdings that it will move some other things. So when you're looking to trade, for example, XLK, I believe NVIDIA goes in the XLK space. If I'm wrong, somebody speak up in the comments. But if you've got XLK and XLK has a bunch of the NVIDIA, and NVIDIA takes a big run for earnings, then XLK is going to move too. All right. That's what I'm trying to say with that. That's what I'm saying with that. All right. Let's go look at our watch list. I'm going to use Peakbot as our place for our watch list today. Use peakbot.com. What I love about Peakbot is that it is an automated broker for sellers. We're going to look here, see what's on the list, and then we'll go and then we'll look at some trade. We had some ideas that came into our community, and we'll go look at some of those. But Peakbot has updated their watch list, the way they do their watch list, which I think is interesting. You go to usepeakbot.com. Again, this is automated trading that connects to your broker. And they will only do what you ask it. The bot will only do what you ask it to do. They push the right watch list. The broker will only do, the bot will only do what you ask it to do. So if you're doing what they call the wheel, they have a hedged wheel, which is really a put credit spread. They have a list of those. Let me take myself off the screen so that way everybody can see what's here without me being in the way. Okay, looking here. Now what they did, which I think is good, they have lower risk in here in this risk level. They got moderate risk and they've got high risk. And I think they even have the high risk. No, the ones that was extra high, they took those off the watch list altogether. But these are all, you got the risk level that you're looking at. And they also, under the trend, it gave you some indication as to whether it's bullish, neutral, or bearish for each of these groups, right? If you're in my community, I put a graphic there that included the lower and the moderate, only the bullish. Why would we only want the bullish? It's because if you're doing a put credit spread, your thought is that the prices will go up. Your prices will go up. Well, you kind of don't want a bearish stock if you're trying to hope it goes up, right? You don't really want bearish. I want you all to take a look at the screen, if everybody can see the screen, and let's pick out one of here that we like. Shows here on the columns though. trying to get it where everybody can see it all together. Nope, I want this one to do the negative. There we are. See here, cash needed. Well, this is really max loss, which is the column you should look at, because max loss is going to be the distance of the spread. This is where you're going to, like, the bot selects the 30 delta strike for the sell leg and the 10 delta strike for the buy leg. Okay. Tanya says they played her delta play. Yeah, you pick a stock. I usually use T-Triple-Q, which I haven't seen T-Triple-Q on the list this week, but that's usually what I use. That's usually what I trade with my wheel is T-Triple-Q. But you can pick something off here. Let's find us one or two to look at. What interests us over here in the lower level? Anybody trade Morgan Stanley or Verizon? I don't see anything in the comments yet. Morgan Stanley, Verizon, Tyson Foods. We got On Semiconductors, which On Semiconductors is probably going to be in that NVIDIA space. So even though they aren't having earnings, it may or may not be wise to jump into a trade with them if they're going to be affected by NVIDIA. DoorDash is here, though. United Airlines, TJ Maxx, Amazon. We can look at Amazon. I have that on my list anyway. Bank of America, Southwest, and Google. We can look at Amazon and Google. What else y'all want to look at? Anybody have one in the chat they want to look at? We're going to look at Amazon and Google. Now here they look at just Google. I always trade Google. I wonder what difference does it make really if you're trading one versus the other. I always trade Google with the L. I wonder if there's more volume with Google versus Google. Okay, let's go see what we got. I have Amazon, and you all can help us determine what. I have Amazon on the call credit spread side. But let's go look and see if we see. Okay, this is what we got for Amazon here. We got our resistance up here at 174 and some change. It hit that and bounced. But this basically did the same thing that SPX and everybody else did last Tuesday. It had it today on Monday, and then it gapped down on Tuesday, and it kind of hovered. Now, SPX and those went on up back to the same spot. Amazon didn't do that. So if we're putting a line in here, we got that resistance at 174, and then there's another resistance at 170. We had a big old gap underneath it. Y'all see this big old gap under here? Yep, it goes from there to the top of that candle, top of this candle right here. Let's see if I can stretch it and let us get to see what's really going on. It's right in there. This needs to come down some though, and this needs to then go up. So there's a gap between 160, just below 160, 159 and some change, and 168. That's a pretty big gap. Okay, we got some gap traders on here. That's a pretty big gap. And Amazon seems to be dancing around that gap. I was looking at a call credit spread here, maybe above this 170, but you could also look at a put credit spread below this 159 because of that gap is going to provide some support at the bottom of the gap. What are your thoughts? Y'all got any thoughts? You think it would be a call credit spread for Amazon or a put credit spread? And if so, we got to find us some numbers so we can put it on our graphic. Let's go look at the option chain and see what we see over there. Did y'all stop commenting? I don't see any more in the chat. Don't see any comments in the chat. Okay, we were looking at above 159 or 160 and below 167, no, 170. So like 160 to 170. Let's see what the plus minus number is. Plus minus 5. Plus minus 5 here. So if we were going down 5, that would take us down to like 165. Probability out of the money is at 75% here. So 165 might be good for the put side. We're going to look at how much money that would turn us up. And then probably would go up to 172.5 or 175. Up, plus or minus 5. If we add that on to here, that takes us to 175. That probably would be a little safer. And we got 175 call credit spread. Now, I want you to always be careful with Amazon because it does, if we look for the trend that it's trading, it has been trending upwards. It's been kind of consolidating here for several days, but consolidations a lot of time is just it getting, the stock is gaining strength to go some more, in whichever direction. Okay, Royal Diadem says put credit spread. Let's go see what that money would look like at the put credit spread. If we did 162.5, 165, we turn this to a vertical. That's going to pay at this point. Of course, market is closed, but it's paying about $36. Well, that's better than, that's more than 10%. Remember, I always say if you're going to trade a spread, you want to get at least 10% off your collateral. And in this case, you are leveraging $250 of collateral. You want to get at least $25 in credit. That's my thought. Oh, yes, Amazon is getting into pharmacy. Yep, sure is. Let's look at it on the call credit spread side. I think I said 175. 175, 177.5 is also paying $30. So if you can turn that into an iron condor, you're going to collect $30+ on each side. That means you're collecting $60 after using $250 of collateral. That's about 22, 23% return on your money. That's not bad at all. But when you do iron condors, make sure that you are only entering one side at a time, because you want to see what it does, at this point, Tuesday, what it's going to do Tuesday. And then you enter one side, depending on what direction it goes, and then look maybe Wednesday or Thursday to enter the other side, because you want to be sure that if it's going to run a big jump in one direction, or if NVIDIA is going to be, or if Amazon's going to be affected by NVIDIA, you want to be prepared for that. Okay. That was our Amazon look. I didn't see any other trades in the chat, but let's keep moving. I'll look at the ones we mentioned in our community. Come on. Let's look at Google. This is what's going on with Google right now. Google had a little bit of a gap here that it needed to fill some of, and it did a little something. Of a gap way above us, but we're actually, the current price is at 140. It closed at 140.52, it looks like. Yeah, this closed at 140.52, and this right at in this support range. Right, I probably would move this down to the bottom of that candle. But we've been on a downward trend with Google. Even if we look from here to here, it's consolidated. When you look at the overall, it's been kind of in between 139 and 149. It's just hung in this 10 point, block. And there's some more gaps that are in here too. And they may want to be filled. Okay, we've got those. I'm not sure. I guess I have this line here, 143, to go along with this, the bottom of this gap from this gap down. Thoughts on Google? Think we do a call credit spread or a put credit spread? I want to help you assess too. When you don't have the Sunday at 5 to look at, what would you do? I could see the benefits of an iron condor. Let me go back a little bit and make sure I'm not missing. We want to make sure that we're looking at the overall trend as well, which I think it's been trending upwards with everything else, but see how we do have a little bit of a trend going here. If I was to put a trend line on it, we could start here with the trend line and go to there. So maybe it'll bump this. It was there, maybe pass through this trend line if it went to this one. It is still going upwards, but this area here looks like it's been going down since January 30th. It did drop and then come back up some more and then drop some more. So what's that called? Lower highs. Lower highs. Anybody got an idea whether or not we should do a call credit spread or a put credit spread on Google? What I see as supports is just below the 139. If I was going to put one on here, it would be, there's a line at where it dropped, where it stopped Friday. There's one here in the middle, 142. Resistance would probably be the top of this gap, which is 145. So between 140 and 145, let's see if we got a plus minus number. Okay, we can delete you. Plus minus 3.9 or 4, right? So if we added that on to 140, added 4 more, we'd be at like 150 and some change. 150. No, we'd be at 145. What kind of math? What kind of math is the math teacher doing? If we were to add 4 to this, we'd be at 145 on the call credit spread side. 145 call. And let me change it to single so we can see what the probability out of the monies look like. Now, if you don't know what I'm talking about, probability out of the money, you need to check. I've got a video on my YouTube channel that is that talks about probability out of the money as an indicator. It's the PROBOTM. It shows up on Thinkorswim. And I think somebody else said it's also on TradeStation. It's the probability of basically being out the money, which is what you want as a seller. You want to be out of the money. You want your trade to be out of the money. So the probability out of the money percent says that if it's a 75, it's saying it's a 75% chance that this strike will be out of the money at expiration. So we try to go with 75 plus if we're picking our strikes. So Google on the bottom side is 137. And on the top side, 137 on the bottom side and 144 on the top side. I think we said 145 if we looked at the plus minus number. But let's look at some premiums. 137 on the put credit spread side is paying $14. This is a one spread. 136, 137 is paying $16. It's a 16% return. And 145, 146 is 13. So it's a 13% return. You put those two together, you've collected $29 and you've leveraged 100. I've leveraged 100. Jamie says on Google, I do a call credit spread. Yep, I can agree with that. I see where it's been really coming down a bit. It's in lower highs over the past couple of weeks since January 31st. It's been a little bit lower, trying to come up, but it's not going where it was before. Okay, I would definitely put there's some resistance in here between these little dojis. Okay, Ocho, hey there. ARM got a lot of movement last week. That was interesting. Let's go to XOM. I also want to do XL, do some XLs today too. This is XOM. Another one that's kind of been in the zone, consolidating, huh? We could put a line right here at the bottom of this big old green candle, $100.57. Price ran back up, got back up to this resistance coming into the top of the Bollinger Band. I think if I was doing this one, this is another one that may provide separate condor opportunity. I don't know what kind of premiums Exxon pays, but let's look at it. See what kind of premiums. I got 102 written down on my paper, and that must be because of some resistance that's inside of here. Some support that's inside of here, not resistance. Well, support and resistance are kind of interchangeable. But let's look at the single chart and see what we see as far as numbers. 73% probability out of the money is at 102. If you want to be a little safer at 101, we got a plus minus 2, so I probably would do 101. Probably would do 101. Better be safe than sorry. And if we were going to the top side, we add 2 more to that, we'd end up at 105 or 106. 106 is a 78% probability out of the money. These are things you do need to wait, though, to see how the market opens and to see what kind of movement the price does in the first 30 minutes to an hour, just to see what kind of movements you get. One of the oil companies reports this week, I think. I think a Valero was what I mentioned, that Valero may report. Okay, we've got 100, 101. That's paying $10. That's a 10% return if you wanted to do that. And you've got 106, 107, which is paying more. But as Jamie is saying, if you want to be mindful, if another oil company is reporting, many times the other things in that same space will move too. They may not move at the same rate, but they may also move as well. So you want to keep that in mind. Keep it in mind. Jamie, what was the one you just told us that wasn't there? I think it was inside of the... nope. Jamie, which one did you just say was in the sell zone? There it is, XLB. XLB. Let's go to our chart. Look at the weekly, see if we see anything of note. This is the weekly chart, meaning every candle is a week's worth of data. So support would be at the 81 and some change. It closed on Friday at 85.17. Resistance on the weekly would be at 85. It's bouncing off. It bounced off the 20-day moving average, or the 20-week at this point. The 20-period moving average, it bounced off of that on last week. It did that week, the week of 2-5. It bounced off that, and it's headed back up to the Bollinger Band. Keeping in mind that Bollinger Bands are to contain about 95% of the data. No, I don't really look at the open interest, Sonia. Sometimes I think when we were looking before for like the daily, when we were trading SPX or whatever on the daily basis, we would look to see the open interest to see, or volume, if it was a big, like if it was a lot of people at that same number, and then we would go to a different number. But we don't look at that as much now on the weeklies. Not saying that a person shouldn't, just saying that I don't. I don't. Other people in my community do. So we came right into this. We're coming Friday, or last week came right into this resistance. And we'll see what, I think this would be good. It hit the resistance and closed below it, so they didn't get to go through it. But it'll be good to see what happens on Monday. XLB, let's go to a daily chart and see what we got going over here. This was last week. This was Monday, Tuesday, Wednesday, Thursday, and Friday. A lot of gap ups. Well, a lot of gaps, not just gap ups, just gaps in general. Okay, there was a little gap here. And then there's another one here between 84.73 and 85 and some change. What do we see? Call credit spread, put credit spread. If we're looking at XLB, definitely bounce off of that resistance. Let me see if we've got another little resistance line right up here at the high of 86. Jamie said he looks at it before he gets into a trade. Above 86, I believe you're going to do, if you believe in it, was going to do a reverse, which is outside of this, hovering outside of the Bollinger Band. So the chance of it bouncing back in is there, and it hit resistance. So a call credit spread XLB might be the move. Let's go look at some numbers. We got a plus minus 1.1, which puts us at 86 and some change. Maybe 86.5 would be a strike we could use, but it looks like it don't seem to like nothing up there. 86.5 has a 78% probability out of the money. Let's change it to vertical. 86.5. This is jack. It's not two. It says negative 220 and it says debit. This is too many things going wrong. If this is red, it should say credit, and you can't get $220 off of a 50-cent spread. Doesn't work like that. You got to maybe have to wait till the market opens on Monday. 86.5 though. I selected the strike just below it for 86.5. It's paying $12, which that's pretty good for a 50-cent spread to collect $12 and leverage 50 is a good little deal. XLB, that is. I don't know if we should pull up with AMD this week. They're gonna be too close to NVIDIA, and so is SOXL. We could look at SOXL, but I'm not sure. Maybe this is one that you trade after you come out of the earnings. NVIDIA's earnings on Wednesday, I believe. You also know we got FOMC on Wednesday afternoon, so it may be best to just wait and trade after Wednesday. Good thing about credit spreads is as sellers, we can wait. We don't have to jump into a trade on Monday. We can totally get into a trade on Wednesday. And because the IV is going to be high, the implied volatility will be high, we should still be able to get decent premiums on Wednesday. Stay out of the way, stay out of the way of the train and still get good trades because we can wait till Wednesday. Theta decay is our friend. Es mi amigo. Yes, theta decay is our friend. I'm looking at SOXL though. It is hanging out at a resistance line and it's been going. We've got a rising wedge. It's kind of narrowing it in. It's going to try to bust and loose in the evening. It's going to try to bust loose. But there's a gap here between 36 and 38. There's a gap. That's going to the price kind of got to it, but didn't go in and really feel it. It may need to do that as well. So I don't know if I trade SOXL before the middle of the week. I probably would wait till after NVIDIA had its earnings to see how it moved. Let's check out Intel. Okay, well, part of this gap has been filled. There we go. There was a gap from January 25th to January 26th. It gapped down. Some of it has been filled in the last few days, but not enough. But we look in here, overall trend. What do we see on the overall trend? Anybody got an idea? But on a trend line, I would go with those two. It looks like it's a downward, but then this has been just kind of consolidating underneath or right on top of this support line. Boom, boom, boom. Hit here and go down. I'm still thinking call credit spread. I don't know if we got above this gap, though, might not be any money at 49 because current price is at 43. It's a pretty good little distance away. But it does seem like this support seems to be holding pretty decent. Let's go look at the numbers and see if we see anything in INTC. Put credit spread, you're going down pretty low to 41.5. The plus minus number is 2.4. 41.5 takes away 2. 41 or 41.5. Let's see what that yields. 41 or 40. 41 is paying $8 for a 50-cent spread, and 41.5 is paying $11. If you believe it's going to stay above 41.5, you can get into that one with Intel. Collect your $11, 11% return before fees, of course. If you're looking on the call credit spread side, 76% out of the money is 46.5. 46.5, and that is paying $8 as well. Janae said it hasn't moved, but may move a bit with NVIDIA. I would stay on the put side below. I would think the put side. At this point, the chart, you don't want to be thinking that it's languished on this put side so long that it's just going to fall through. It did bounce off of it a little bit, but it's kind of coming to test it again. So that's just something to keep in mind, that it's coming to test this 42.5 resistance again. Now, if you get below that, get below this 41.5, you got a little more, a little more room to see what happens there. Which XL do we want to look at? We decided not to do K, right? Because of the tech. We looked at XLB. Let's look at XLE. I think somebody suggested XLE. Get a little more study time this weekend as far as prepping for your trades, because we got an extra day where the market is closed. Support down here. One in there. And we've got resistance up here. There's another. It's been kind of consolidating. It kind of came out of the zone a little bit on Thursday and Friday, but it had hung out in this zone for a while. Thinking from a trend standpoint, I still would probably go with an upwards moving trend. I'd go with that. Resistance just above it. But if you got a lower low, this might be one of those what's it called, a flags, where you got this one coming down, and this one is coming up. Then it's gonna just trap in here until it breaks out. Right? That's XLE for energy, right? Let's switch over to the option chain. Underneath would be 84. If we're looking just at probability out of the money, would be 84. And on the top would be 87. We got plus minus 2.2. Take away 2.2 will put us at like 83. Adding 2.2 puts us at 87. Okay, we said 87 was our top number here. Vertical. 87.5 is paying $10 for a 50-cent spread. Now, this is what you can do if you're doing 50-cent spreads. You can, decide you're going to take a couple $100, $200, $300, $4 or $5 is up to you. But pick, 5 or 6 different 50-cent spreads and run them all. Run them all. That way, if one doesn't go where you want it, you got 5 others that do. You know what I mean? If you put all the money in one stock and one basket, and that stock doesn't do what you want, then all your money goes with it. But if you diversify it around, find 4 or 5 different, which I've mentioned, probably 4 50-cent spreads already, spread them all around, you can take in a nice little premium. Let's look here. I want to show you something while we're talking about that. How does that benefit us? Like how can we do that? How can we make our money work for us, right? If we do 5 stocks, let's say if we use $500. I want to make this big so everybody can see what I'm talking about. Let's say you're going to use $500 and you're going to do 10 50-cent. I should write the word 10. That way you'll know I'm not talking about that. 10 50-cent spread trades. Right? Collecting 8 to 10% for the week. Okay, we got 10 50-cent spread trades collecting 8 to 10% for the week in premiums. That means you're gonna, for each each trade collects at least, what's this, $8? No, collect at least $4, $5. 5 is 10%. Collects at least $5, which you would take in more than $5 because you have to keep in fees. So that's going to say we're going to take in at least $7 for each of these, right? If you're doing 50-cent spread, I still look for $10 almost as my minimum. Yes, Cezaline, we will. I'll look at that. I kind of look at $10 at least for my minimum, but let's be conservative. At least $7. That's going to mean you're going to collect $70 in premiums for the week. Okay. Doesn't feel like it's a whole lot, right? I understand. So then now you have the first time. You have to remember that when we're first starting off, it doesn't grow like it's not huge at the beginning. It grows in time. Now you got $570. So now you're really able to do 11. Now I would like, if you're going to do this, you want to look at this being money that you can walk away from. Don't put your bill money on this. Tell me, oh, I'm gonna do. Yeah, no, we trade with wisdom here. Okay, so then next week you do 11 of them, and you collect at least $7 each. Which you're gonna collect more. I'm doing an average of $7. Right, that's $77 in premiums. Now you're at 600. I'm not going to keep going, but you're at $647, right? And you continue to trade that as it grows. Continue to trade as it grows. Yes, there are going to be some times that you're probably going to have to close a trade out for a small loss. But if you're diversifying in the midst of doing that too with 10 or 11 stocks, and you can also take $250 and do 5 of them. I mean, you know what I'm saying? It doesn't have to be $500. Use $250 and do 5 of them. But you're going to get stocks that you really like more than others. And you're going to trade those, rinse and repeat. You're going to rinse and repeat those every single week. So that way you'll get used to seeing the stock. You'll get used to seeing the candles. You'll get used to seeing the chart, seeing how it moves. How does this particular stock do? How do they act? You'll be able to see all that. And then grow it on from there. And you keep growing. It's a small account challenge. We're growing our small account into something bigger. All right. Sizzling wants us to look at Adobe. Looks like a call credit spread might be in order. Let's see. ADBE. Only one E. I had some other things on my list. I have to look at it. I got to where I was just at the place getting ready to do my research, and I got super sleepy, so I went and took a nap. And my nap, I woke up at 4:30. Alexa helped me wake up at 4:30. I told her to set the alarm. Sound the alarm. Okay. Ooh, Adobe. Did they have earnings or something on Friday? What happened to Adobe on Friday? Was there some news? Something newsworthy happened? What happened on Friday to Adobe? Anybody know? Well, I would say call credit spread at this point too. But it looks like it might have fallen into some support. Looks like there's the line. It actually went through that support at 559. What happened to Adobe? Must have had some news. It's another support here that it went into. 545 is the support. And it hit it right there. Boom, no wick. You know what? Your commission rates on Thinkorswim, you can send them a message, or you can get on with them in the chat room and ask them to reduce your fees, to charge you lower fees. And generally they do. So you have to just ask. Get on where it says up here support. Y'all can see my screen. Yep, where it says support. Send them a text message and say, I would like to discuss lowering my rates. Oh, you said I did. Did they lower them? Nothing yet. Okay. Yeah, they lowered mine around the spot, but I had also been trading spreads for a couple of years. They lowered them. But you know what? The other thing you can do, many people aren't a huge fan of Robinhood, but Robinhood's fees are very low. You can't trade SPX and XSP on Robinhood, but you can do all the other stocks. So Robinhood's fees are very low. It's got a lot of other issues, but if you can chart on Thinkorswim or chart someplace else and then enter your trades on Robinhood, it just may be worth it. Just may be worth it there for less fees. Because there's sometimes I've seen trades at 50-cent spread that I would take a $5 on if I was in Robinhood, but I wouldn't take $5 on it if I was in Thinkorswim, because Thinkorswim's going to take more in fees. Adobe. So what I see here, if we're going to do a call credit spread, there's some resistance that's in the middle here through the 564 maybe. Let's go look at the option chain. Didn't nobody care what happened to Adobe last Friday? What made it drop like that so bad? Okay. Well, a call credit spread is going to be 565 is the 73% probability to have the money. 565 and 525 is the support or put credit spread side. 525 and 565. 525 is paying $113 in premium, but it's a 5 spread. That's actually pretty good. That's a 20% return. It's paying 113, and the 565 is paying 120. But let me see. I don't know if I counted up the 25. Plus or minus 25 is the IV number. So if you add 25 to this, you're going to get to 6071. So you want to go at least 570 according to that, which is paying $80. That's still above 10%. And you would subtract 25 from here, which puts you at 520, put you down one more. And that one's paying $37. So you still could take in over your 10%, almost 20% by doing an iron condor. But you definitely want to see, I would want to know what's up with this Friday candle. And if this news was bad enough for it to continue to go down. But I do see a call credit spread because it blew through these supports, and it's got another support down here at 506. There's a few in between. I didn't mark all of them, but there's one in between there too. Who's got questions? Anybody got questions inside of the chat that we went through several stocks. Questions do we have? We talked about earnings. We looked at last week, looked at this week. AI competition. Oh, wow. Janae, what do you do at the AI competition? I'm interested to hear about that. I've been expanding my AI knowledge of creation. But I mean, what's an AI competition? I know you get ready to go, but do tell. Do tell. What's I'm looking for? Guess not. Okay. I want you all to enjoy the remainder of your Sunday and also plan to enjoy your day tomorrow, President's Day. Go buy a mattress. Always weird to me that they sell mattresses on President's Day. Why? Why is that the day for mattress buying? Anyway, can I show my stock picks? I joined late today. What we looked at today was, let's see, what did we talk about today? I'll go to this screen. Let me share it again. Present. Share screen. And allow. Somebody who's else in the chat for Adobe per the rundown. You got to ask me a clearer question, Janae. I don't understand what you mean by that one. We looked at XLB today, Gianfranco. I think we looked at XLB call credit spread. We looked at Amazon as a call credit spread and put credit spread. We looked at Google for both call credit spread and put credit spread. Gianfranco, one thing we did talk about was NVIDIA has earnings this week, so it's going to affect probably some other things. We looked at Exxon 101 put credit spread and 106 call credit spread. We looked at XLE. Did I mention that one? No. I think that's all. We looked at Adobe. Call credit spread. Y'all know this video, once I finish it, it does stay on YouTube and it can be watched again on YouTube. It stays there for the week. As soon as it's over, you're free to jump back in and watch it again, where you can maybe pick up the beginning, Gianfranco, and see what we put in for strikes and all. But those are the ones, unless I missed something, I think this is all we looked at today. I was thinking about Microsoft, but they're probably going to move along with NVIDIA also. Adobe shares tumbled Friday after a high-profile artificial intelligence startup. Oh, that's what Janae was telling us. Okay. OpenAI introduced a new text-to-video generator. Adobe stock plummeted more than 7% on the news. Maybe somebody can explain that to me. Why did Adobe's stock drop so bad after a high-profile artificial intelligence startup? After OpenAI did something different, people jumped their money from Adobe and jumped it into OpenAI, because OpenAI, are they a part of Microsoft? I guess I don't get the whole story yet. Are you going to the live TOS event next month? Who's giving an event? Thinkorswim is giving an event? Sonia? Oh, I hadn't heard of it. Maybe you can put the link in the chat or something for us so we can look at it. There may be some people who live nearby who could take a road trip. I hadn't considered it next month, but all things being equal, you never know. I actually I've been missing traveling. I haven't really traveled anywhere in an airplane in far too long. I just a little car traveling, which that's fine too, but it's time for me to get some air miles. It's like since I came back from overseas, I hadn't really been anywhere. Not too much. I need to change that. Need to change that a bit. Jamie, did you get an answer on Adobe versus the OpenAI thing? New text to video generator. I did pay for the membership at ChatGPT. So I could get, because when as I understand it, if you create images on Bing, that you can't really use those images on other things because they still belong to Bing since they were created for free. Even if I was told by some people that you could still use them if you altered them, like in Canva or something like that. But then other people have come on and said you can't use them in either. Now, I don't necessarily think that Bing is running around the internet trying to find images that were created by itself. It could be, but nobody needs that smoke. So I did open up and open AI, the Chat GPT. I paid for the membership so I can be able to create some graphics and stuff like that. All this stuff looks so cute. Always looks so cute. Okay. All righty, you all. We will not have a call in the morning since the market is closed. We only do the morning calls when the market is open, and our market is not open. Okay, let's see what we got in our slides. Don't forget, we are, as always, going left. We're still going left. Yes, I want to share the results. I forgot to do this. Where we're leaning into 1 to 2 strategies. The small account challenge. Small account challenge. Thank you, Sonia. Please send it if you find it. Week 2, we made $297 in week 2 in our small account challenge. The people who are still hanging in, there's some people who are still getting their feet wet, and I've been reaching out to them, trying to get them, moving. If you're in a small account challenge and you're listening to me, you can totally trade in your sim. It doesn't have to be your live money. The whole purpose of this is that you learn how to use credit spreads to grow your account. All right, you're growing your account. So week 2, we generate $297, which I know it's more than that. $297 is what was reported on our spreadsheet that we're using. But I know there are people who are maybe trading more or trading and not putting it on the spreadsheet. So I believe there's more that we've made, but I can only share with you what's been shared with me. Okay, $297. I'm excited about that. $300 more from the people who are doing that. You get to where you get comfortable rinse and repeating, and then you scale it up. Sonia says I'm in it. Yep. Then you get comfortable and you scale it up. This was week before last. Our results are going left. We're going left, leaning in on 1 to 2 strategies, getting some education, right? Focusing on fundamentals and trade with a plan. That's what we need to do for 2024. We want to do more and more money in premiums, which means we need to grow what we got, which means we need to grow our skills. We need to grow our confidence, and we need to grow our trading ability and our trading accounts, right? Jamie said, because Adobe does a similar thing to competition. Okay, that's what made it. Me, but I am present in the group, which we can't say that for all the groups, can we? Nope, we can't say that for all the groups. All right, that's our trader's declaration. We don't really do that on the weekend. Yeah, I know it's frozen. I saw it. I saw it freezing up. Remove from the screen. Just me. It was frozen. Yep, I saw it spinning. I saw it spinning. Said it's just chilling on this end. I'll wait till y'all say it's clear again. Is it all clear? Is it all clear? I know what I did want to show you all. I don't know if I got it done enough to show it though, but let me see. Give you something to look at for your research. Come on, baby. Oh, I didn't really put anything in the put credit spread side, but I think we came out with some more of these. We'll put in some numbers. Come on. Doesn't want to move. This week is going to be, got to change this anyway. Going to be the 19th through the 23rd. I know y'all can't see what I'm doing. I'll put it up on the screen in just a minute. I'll share my screen. You can see it as I do it. StreamYard. Present. Share screen. Screen to allow. Ah la la. Where'd it go? Must be that one. Yes. Ay, ay, ay. This is what I've started to work on. I can add some stuff in here. Did anybody trade ARM last week? XLB was a call credit spread. I don't believe it's up there. You see, I got part of it completed. Maybe I'll take this and move one of these to this side and move the other one to this side so the list can grow a bit more. Exxon, we did on both sides. Yep. Amazon, we looked at Google on both sides. I will get this filled in over the next day. As I gather enough energy, I will do it. 29, and this is, I want all of y'all to be 29, not just you. Okay. Enough of that. Mara showed up on the watch list as well. Oh, thank you. Mara showed up on the watch list. Mara. Oh, let's look one more place before we disappear. I'm going to look at one more thing. T-Triple-Q. I wanted to do that before we cut off. Y'all know T-Triple-Q is one of the ones I trade regularly. T-Triple-Q. This is what's going on with the T-Triple-Q. Trying to fill this gap. It's almost filled it up. From the Tuesday drop like everything else had, but it's riding along this line here. What would we say? I'm thinking it's still got some, as far as direction. It's also going up right in between these two, the wedge. This one here, probably this 58 probably can go on up to the 60 to go with those. I think I'd still ride with a put credit spread on T-Triple-Q. What do you all think? It's on my paper. I think I had 54 as the strike price. Let's go look. Single. 54 is a 77% probability out of the money. On top of it, the 60 is the 76% if you're doing the call credit spread side. But the put credit spread side, what did I say, 54? Yeah, 54 is not going to pay much money. It's paying $7. If you wanted to stay there, you wanted to widen the spread and collect more money, you could change it to 53.54, and that's paying $15 instead of the 50-cent spread. Turn it into a dollar spread. Okay, I'm gonna show you real quick what I did there. I had 53.554. I selected it, but I really wanted 53 instead. So I changed the 53.5 to 53. That changed it to a $15 credit, right? So then you could do that on the put credit spread side. And I said 60.61 on the call credit spread side, pays $22. You put those two together, you're at $37. You're collecting $37, leveraging 100. Could be a pretty good deal. T-Triple-Q can go on our list. Let's see. What did I just, no, not, was it there? Yeah, it can go here. TQQQ as a, you do either one. Call credit spread or put credit spread, depending on where your comfort level was. Okay. All righty. I am wrapping up for sure this time. I want you all to remember that we are here week after week to make sure that we are learning more and more about options trading as a seller. Okay, I'm Arlissa Pinkelton, the seller's coach. If you haven't subscribed to the channel, please do so, right? Please do so if you haven't subscribed. And you can always feel free to put a super chat in there. You can always feel free to say, you know, I appreciate what you're doing every week, Arlissa. Here's a few dollars. Go buy yourself a triple shot decaf espresso. Who knew that the double shot decaf espresso at Starbucks would be $4? Richard says, please detail the benefits of a call versus put credit spread. There's no benefit. Put credit spread and call credit spread are the same. It's just you want to trade with the trend. So if it's going down, you want to do a call credit spread. If it's going up, you want to do a put credit spread. If it's kind of hanging in the middle, you can do an iron condor and collect money from both sides. There's no benefit to one side or the other. It does seem that the stock market likes to go up more than it likes to go down. So sometimes call credit spreads can get you caught. But when a stock turns around and it starts going down, a call credit spread is what you do. It's just basically like plain calls and puts, except for we're doing them the opposite. So where you normally would buy a call, we would sell a put credit spread. Where you would normally buy a put, we sell call credit spreads. It's the same thing. We're just on the other side. Okay, what's on this side? On the other side. Okay, 22, 23rd of March, 224, Atlanta Marriott, Buckhead. Oh, they got a Papado in Buckhead, don't they? Isn't there a Papado in Buckhead? All right, y'all, I'm wrapping it up. Go try to find me some dinner. All right. I want to bid you a fond farewell. Remember, we do two things in this community. That is, we stay green and we get this money. All right. I'm going to see you all later. Everybody have a good evening and a good day tomorrow. And we'll see you Tuesday morning on our call. All right. Talk later, everyone. Bye. Doesn't want to hang up.